Hello, everyone. This is Randy Kirk, and many of you are going to really like today's video because there's two things you've been asking for. You've been asking me to get a better camera, and I'm just sorry. I keep playing and keep trying to come up with ways to improve the video quality. I just haven't quite figured it out yet, but I'll get it. And number two, a lot of you have been asking to see numbers and to see them, nice and big so that it's really easy to follow what I'm trying to say. So with that, if you really like today's video, because I've done those two things, then please like it. And that'll also help other people to see it. And also, please, I encourage you to subscribe if this kind of content is useful to you. And then my Patreon channel down in the description below, you'll see how you can get to the become a part of the Patreon channel. And that also helps support the channel, but also we're looking for significant dialogue through that avenue. Okay. Today, we're going to be talking about Lathrop. We're going to be talking about energy. I know we've talked about it before, but there's such breaking news all the time. And please understand, this is as big as auto, according, not to me, according to Elon. Energy will be as big as auto. So don't take it from me, take it from him. How long will it take to become as big as auto? I don't know, but profit-wise, it might only take a couple of years before energy and auto are competing straight up. So we have, of course, wall panels, and then we have utility-size storage. Today, we're going to be talking about Lathrop, which is basically utility-size storage. Now, I'm going to start off with some bragging, okay? And I know it may not be a good look for me. I don't know, but we gotta take what we can get sometimes. And what I want to start by saying is that I'm sorry. Let me go over here and get this copy. The Elon Musk mission was published on October 27th. On October 27th, you could have gotten a copy of this book. And in the book, you could have gone and you could have seen this chart that's in front of you right here. This is my projection for 2023 for large-scale energy storage out of Lathrop. You can see here that I was predicting that we would have 1.1 gigawatts in the first quarter. I'm sorry, this is the previous quarter. So we're showing the previous quarter's approximate information. And then by quarter one of 2023, 6 gigawatts. Then you can see 8, then 10, and then 12. For a total throughout the year, 14, 24, 36 gigawatts total for the year, which is probably about what we're going to end up having this year. We'll probably have more than that. I'm now thinking it may be closer to 40, maybe be over 40, might be 50. But that was my chart back in October. Of course, I was creating this chart before October 27th, but it was available for you to see it on October 27th. So where I was wrong. So I was wrong in a couple of places. Number one, if we start with revenue, I was showing it would be about much too much revenue per gigawatt. It's probably about half of that. Talk about his reporting quickly and then give my own commentary. So he says that Megapack has been generating a lot of noise. He talks about zero-sum game 33. And at first glance, he said, hey, these numbers just seem too good to be true. How could Megapack be this disruptive? And the financials seem to be incredible. And he admits that he felt the same way. When he first saw the information that was coming out, he thought, boy, this just doesn't make sense. He says, so I gave it some thought, I dug into the numbers, and in this thread, he's going to walk us through at the very highest level. So just this is why I wanted to use his commentary. By the way, I asked him to be on the show. I've asked zero-sum 30 to be on the 33 to be on the show. Zero-sum game 33 to be on the show multiple times, begging practically. I'm sorry, I've gone to begging. But James Cat is anonymous and he wants to remain so. And zero-sum game 33 apparently just isn't ready to go on my channel. He's turned down a couple of other YouTubers as well, so I don't feel that bad. But I'd love to have either one of them on the channel to discuss this. Okay, so here's how James Cat describes it. If you've been a follower for a while, he's not someone who blindly believes both theories. He's heard what he's probably listened to what I've had to say about the bots. I think that that Tesla will build 300 to 1,000 hand-built Optimus robots this year and deploy them throughout their factories in order to generate lots and lots of opportunities to test and to generate the data that they need to make them better and better. He would probably think I've lost my mind. I have no proof of that. I have no, this is not reporting. This is me thinking first principles. What I do, what do I think Elon would do first principles wise in order to move along the robot thing as quickly as possible? And that would be to spend somewhere around $50 million, $100 million to build these robots and put them into use and start seeing where the useful spots are. Okay, he says, so anyway, we'll go past that. He says, I think of them as pipe dreams, but alas, that's not the point of the thread. So first of all, Megapack isn't new. So why have the margins been so poor in the past? First off, it's important to remember the Megapack product Tesla's building in Lathrop is not the same product they were building previously in Reno. So he gives a little bit of information on that. Let me blow it up for you if you want to take a snapshot of it, or if you want to see the details. But he talks about the difference in terms of the chemistry. He talks of the difference in terms of the overall size of the product. And so therefore, all of the things that are not batteries are going to cost less as a percentage. And the cost of the batteries that are now being used will be less than the batteries that were being used. So overall, and they've also increased the price per kilowatt hour. So total sum game, he's saying, well, okay, that makes some sense that we potentially would see margins greater than we might have expected. I was expecting at least 30% margins, because if you're sold out for, a year and a half in advance, you're not going to be selling it for 10% margins. He suggests that the margins might have been less, in Reno than they are at the factory that was designed specifically to generate these pieces of equipment. And as the ramp happens, of course, we all know that costs go down and margins go up. So he's saying that because of all these reasons, he is now thinking, well, you know what? Maybe if you put all that together, production scale, everything else, maybe it's possible that the margins could be reaching the 50% level, which is what has been suggested. In fact, some of the reporting has put the potential margins higher than 50%. I want everyone out there to be careful when you're looking at different people that are making these speculative conversations. For one thing, sometimes people can get into the place where it would be possible to double count the IRA benefit. So I think that Zero Sum Game 33 has, when he's been talking about maybe 70%, 80% margins, has been including all of the IRA money into the cost of goods or into the margins, rather than looking at that as a separate part of the project. And that's fine. There's no, I don't think there's any accounting principles that would keep us from doing that. But I also think that there's some concern that every Megapack sold may not have the full $35 for the battery cells and the full $10 for putting it into a pack. We don't know for sure that all of them are going to get the full benefit. Some might get the 10 and not the 35. Some, well, I guess if they get the 35, they're going to get the 10. So it's either going to be just 10 because the raw materials are not from, it might be 0 because the raw materials might not be from the right country that go into the cell. So you might not get any benefit for the cell or the packing, or it might be just the 10 because you're getting the cells from somebody that has the right materials. So you're putting it into a pack and you get the benefit for that, but you are not the one making the cell. And then if you're making the cell, you get the 35. Now, here's where that breaks down. You've got Panasonic, who's making probably most of these batteries. And whether they go into cars or whether they go into the energy packs, whether that's going into power walls, wherever they go, the question has been, are the ones that Panasonic's making, are those something that Tesla gets the $35 from? current reporting today, right today, from a couple of folks, from Bradford Ferguson in particular, and some other folks, seem to suggest that yes, Tesla will get that $35, but not all of the cells from Panasonic will go into necessarily Megapacks. So it may not always affect the cost of goods on the Megapacks. Tesla is making cells, and they're going to make more and more cells down in Austin. And we're assuming that we'll get the full 35 benefit from those, but all those are not going to go to Megapack. So some Megapacks might be getting cells from somebody who is going to get the benefit of the $35. Now, I've said this before in other YouTube videos. It is also possible that if somebody's making the cells for Tesla and they are made with the right materials, and so they get the $35 benefit, but that benefit's going to go to, you know, a CATL facility here in the United States that's making them. Tesla certainly is going to beat them up for part of that benefit. So yes, that could still end up that all the Megapacks get some benefit of the IRA, but we have to be careful. We really don't know. So it's what I've been doing in all my analysis has been figuring out cost of goods for our specific cars, for the specific Megapack, for the specific Powerwall, whatever it happens to be, and doing that without the IRA involved. And then the IRA money, I'm putting that into a separate pot. So if we have 40 gigawatts being done at Panasonic and we're getting all of that 35 plus putting it in a pack, so 45, that gives me something around $1.7 billion worth of benefit, IRA benefit. I'm putting that into a completely different pot and saying, I don't care which product, which host it goes into, Tesla is going to benefit from it. So that's my method of doing it, which I think is less confusing. All right, so we go from there. So he mentions again, prices increasing as they've ramped these up. They've also done something new, which is, and I've run into this many times over the years, where inflation was a factor in a sector, or where inflation was a factor overall. You may have seen it with UPS. We're seeing it last year with UPS in the mail, where your pricing is based on a sliding scale, depending on what happens with their costs. So in this particular case, Tesla has gone to their customers and said, on all contracts, we don't know when they started this, on all future contracts, lithium in particular, but possibly other metals as well, will the price of your final Megapack will be determined based on what's happening with lithium pricing at that time. So it's a sliding scale. If the price of lithium goes up, you're going to have to pay more for the Megapack. If it goes down, which would be great, you're going to pay less, because we just want to maintain our margins. So he brings that up as well. I think that's an important point for all of us to understand. So that he goes on here. Okay. Despite all the cost headwinds, Tesla Energy business posted 2 consecutive quarters of about a 10% gross margin. If we see these gross margins recede in Q4, I suspect lithium costs might be part of the reason. I don't think you'll see them recede in Q4. I think what you're going to see is you're going to see them increase, because the energy part has been split up among all of the energy divisions, and some divisions have been getting losses. If they show energy storage or even Megapack as a separate line item, and then show us the cost of goods and show us the net, that would be great. I love that. I think investors everywhere would love that, and that would be really helpful for us to know what's happening. Or maybe it's just a question in the earnings call to find out what the margins are. Now, Zero Sum Game 33, he did some first principles analysis, looking at the cost of batteries, looking at the total cost of batteries to go into one of these Megapacks, looking at the capacitors and what those cost, looking at what the shell, these big containers might cost, labor, the whole 9 yards, and came up with what he believed to be a number. On another day, he or someone else was looking at the Tesla website under the Megapack section. they did some back-end evaluation, and they found some code that seemed to be displaying their cost of goods analysis, which is kind of shocking. I don't know why it was there. Don't know why somebody would put it there, but they found this analysis, and the analysis was actually a slightly better in terms of margin than what zero-sum game 33 had come up with. So that seemed to solidify or confirm his numbers. And so for me right now, I'm figuring 50% margins overall, because sometimes when they sell larger quantities, they're charging less. And that's just margins on the Megapacks themselves. There's also all kinds of additional income that they're going to get from designing the setup, from installing the actual Megapacks and all of the equipment that goes with the Megapacks, from software and maintenance after the installation. So the total amount of revenues could be double what we're thinking of. We're thinking of that 10,000 Megapacks capacity at 2.2 million per. That's where we get our 22 billion. Sometimes that might be higher, it might be lower, but then there's an additional possibly almost as much money or significant amounts of money that would be added to that for all of these other ancillary costs. All right, so then he goes into the marketing. I did an entire video on the marketing of the Megapacks, who is going to be interested in these. Let me just show you what he came up with. He says, of course, there's a backlog until Q4 of next year. So capacity, current capacity, they got about 8 times more backlog than they have capacity, giving them pricing power. So then he says, well, is there some benefit to the utilities that would cause them to just, be lined up like this forever? So he does this analysis, which I had not done, and I think is really good. He says it helps them in several ways. You have the immediate dispatch of the energy with no startup time, unlike coal, gas, etc. Many of you probably know this is instantaneous. So when there's a surge and the batteries need to respond to a surge, it is in milliseconds that it's responding to the surge. This reduces costs by a lot because gas-fired peaker plants take a while to get online. There's a high cost of that period when they're first getting online, and then they operate at a very high cost after that. So this helps utilities lower cost of generation and transmission. This can be paired with renewable energy generation to add even more energy to the grid. So yes, most of these Megapacks are not going to be picked up by utilities, except when they're going to be paired with either wind or solar. And I've been talking about wind solar combination. Wind solar, I just call it wind solar battery. I came up with that a year ago and been using that everywhere as a description of what this entire planet is going to look like in 5 to 7 years. It's just going to be covered with wind and solar installations that are backed up by these massive battery packs. So then those benefits can be passed on to customers. A perfect example would be ERCOT in Texas. By adding just approximately 300 megawatts of storage, ERCOT will generate approximately $1 billion in savings in 2025. That's a one-time purchase of 300 Megapacks with a total cost of $750 million, and that equals $1 billion in savings per year as of 2025. Now, that $750 million probably does not count some of those other things that need to be done, like installation, design, and such. But even so, the return on investment just massive. So the chart below shows the savings. If you want to take a snapshot, I'll leave that up for a second. As the below chart shows, 313 megawatts of battery storage additions to ERCOT translates into nearly $1 billion of savings in 2025. Adding more storage increases the savings for load and revenue captured by the storage, but at a lower rate per unit of storage. Okay, so we're almost at the end of this. So this will cover 30 to 70% of grid storage costs. So the utility will actually only pay about half of this. Oh, so I'm sorry, I missed the beginning of that sentence. Let's go back up. But wait, there's more. The IRA will cover about 30 to 70% of grid storage costs. So part of the IRA, the utility or other person purchasing these energy storage devices gets discounts. They get IRA money. They get tax savings. So this is a 30% savings. I'm hearing some talk that this ends in 2025, but there's other statewide and regional savings that can be had. One way or another, he's saying that there's a possibility that it's an even better deal for them. So Tesla can dramatically increase their price even from where it is today, and the value proposition would still be ridiculous. People who scoff at the 50% gross margin should take note of this fact. The value proposition is so good that even without the IRA, why haven't utilities caught on to this? Well, there's a million reasons that utilities haven't caught on. Why haven't fleet sales owners caught on to the savings on Tesla vehicles? It's nuts. It's crazy. Why hasn't every police department in the United States started purchasing Teslas? Why hasn't every government agency started buying Teslas for any of their needs for automobiles? Why has the U.S. Post Office this past year had to be confronted about the fact that they were going to be buying more gas vehicles, and they were confronted to the point where they changed, and now we're going to be buying mostly battery, but still not 100% battery. So yes, there's a million reasons why people are slow to adapt or adopt, new ways of doing things. But right now, the reality has become so great. I want to say the tipping point was probably about 18 months ago, when the first reporting was that solar or wind combined with battery was now significantly cheaper to install and run than it was to even continue to run your gas peaker plant. So you were better off to tear down, even if it was only 3 or 4 or 5 years old, you were better off to tear down a gas peaker plant and install a brand new solar or wind plus battery installation. You would have immediate savings from doing that. Well, that news headline, I think, probably ricocheted all the way through the utility world, and they began to see that certainly as they were taking gas peaker plants offline, they should be switching. Maybe some of their peaker plants that were getting close to that point, they would be taking them off earlier, and that any new demand that needed to be put in would certainly be that as well. So peaker plants, I think it said up above, I probably missed it, there's about 1,000 of these peaker plants around the country that need replacing, and every one of them will require a substantial number of these, like 100 or 120 of these Megapacks in order to make the switch. That's just one. He just goes into that one category. Manufacturers will absolutely benefit from getting these combined with solar on their rooftops. Probably major retail stores will do so as well. Every charging station that Tesla is putting up now, and all the rest of the folks that are putting up charging stations, they're going to need mega chargers to manage these charging stations. Everybody that buys Tesla semi-trucks is going to need mega chargers in order to manage the load that these take all at once. So there's so many markets, and that's just just beginning to understand the potential. Tesla cannot meet that. Well, in fact, Elon Musk said the other day that the market for energy storage is almost, he didn't even say almost unlimited. He said it's unlimited. So I'm just using his own words. So now we've covered the product, the economics. Now he talks about the TAM. Okay, here's where he talks about 1,000 gas and coal peaker plants across the country, just ripe for taking out. So that's 236,000 Megapacks. and so Lathrop can do about 10,000 a year. So 24 years of full capacity for that one plant. So then he talks about other opportunities where you just have normal, it's not a peaker plant, just normal wind and solar installations that are there now and are going to be going in future years. Capacity is going to increase everywhere for decades to come. So he agrees on the infinite number. He says, in conclusion, Tesla's Megapack product has an almost unlimited TAM incredible pricing power and far different financials than their first generation product. Revenue is recognized over time, and the contribution of Megapack will increase significantly in 2023. And let me leave you with the one last thing. He mentions this issue of the revenue being recognized over time. We think from an accounting standpoint, some of the reporting is not from me, but I understand it. Some of the reporting is suggesting that when the Tesla will only be able to book the profits or book the revenues and the profits from these projects when they're turned on. That may or may not be true. They are getting, I'm sure they're getting deposits and they're getting payments along the way. But maybe accounting wise, it may be that it's only after all of the Megapacks have arrived on site, all the concrete's been laid, all the Megapacks have been installed, all the wiring has been run, and you finally flip the switch and it works. That may be the day that Tesla gets to take their actually invoice it so that it hits the bottom line, or the top line and the bottom line. So that may be true, in which case it will skew the numbers out into future quarters. But that would be another thing that we'd love to hear at the earnings report coming up, as everybody should want to know way more about energy storage, because it's going to be huge. And the reporting started here. If you haven't bought a copy of the Elon Musk mission yet, guess what? There's other reporting in there that's just as huge. If you've been listening to this channel and you haven't subscribed yet, believe me, there's going to be other breaking news. Don't ask me why. I think about these things differently than other people. And there's probably other people that think about these things, but they don't write books and they don't do YouTube videos. So this is the combination that you've got. So subscribe to the channel, join Patreon. Let's have a great discussion going on Patreon. Please like this if you did enjoy it. And was there anything else I wanted to say to you today? There is going to be a phenomenal video out tomorrow morning talking about my analysis of the stock catalysts for 2023 and what that's going to mean in terms of revenues and profits. So, hey, it's been great talking to you.